Hey, good morning. Welcome to IR Insight Live. I'm your host, Will Briganti, and joining me today as my guest is Adam Lazarus. He's a senior analyst here at Nasdaq IR Solutions and IR Intelligence. Adam, great to have you back on the program.
Glad to be back, Will.
All right, happy summer. So we're going to discuss the latest earnings cycle as well as how the transportation has done so far this year. So let's kick off with earnings. Tell us what you're seeing.
Okay. Well, this week, earnings have really revved up.
Right.
We've now seen over 210 companies in the S&P 500 report. So far, we're seeing, at least on the earnings level, approximately 84% of companies are beating what expectations were, while roughly 73% are beating on the revenue number. Both of those numbers are above the last four quarter averages, according to Thomson Reuters.
Okay. Now, in terms of your analysis, are you seeing anything different this quarter than last?
I have. So CEOs have been mentioning on a lot of their earnings calls concerns around tariffs and trade wars. Companies have also been mentioning foreign exchange or currency because the U.S. dollar has strengthened with the Federal Reserve tightening monetary policy compared to other central banks such as European Central Bank, the Bank of Japan, Bank of China, which has been more of an accommodative monetary policy.
Right, and there was a meeting yesterday in Washington.
Yes.
Obviously with, I believe, the EU president, right? So given that announcement, has anything potentially changed, or has that potentially changed what you just mentioned?
So yesterday they announced a temporary ceasefire and de-escalation in the trade war between the U.S. and Europe. And it looks like they're going to negotiate to lower tariffs and potentially increase U.S. exports. But for right now, it's more of a wait-and-see approach to see if it happens.
Sure. Let's switch gears a bit. That was good insight. Let's talk about earnings. So
Sure.
what's on the horizon for earnings?
So this week we've had a bunch of heavy hitters. So far we had Alphabet, we've had Verizon, Facebook was yesterday after the close. And we still have a bunch of heavy hitters. We got Merck and Exxon still up for the week, so still a lot to go through.
And as people know, you cover the transportation sector.
Yes.
So any highlights from there that you're seeing in terms of how that sector has performed year to date?
Okay, so not the best, of course. They've been struggling a little bit with the concerns around tariffs, but a lot of companies, you're still seeing people order and ship stuff on Amazon. You're still seeing business people fly on airlines, which is the most lucrative revenue stream for the airlines. But overall, we're seeing the Dow Jones Transportation Average. That is up a little over 2% this year, which has lagged the broader markets.
So obviously, outside of the tariffs, what else is hurting this sector?
Okay. So the strengthening U.S. dollar is definitely hurting, and the rise of oil prices. Okay. Brent oil is up over 10% for the year and has touched upon $80 this year. And with the U.S. dollar strengthening over 2%, it definitely eats into profits.
So if you had to predict a forecast or project a forecast for the rest of the year for the sector, what's your bet?
Okay. So as mentioned earlier, we're barely up year to date.
Right.
What I would say is from predictions or what we're reading in the latest earnings calls, similar to like the airlines, we're likely going to see a slowdown in the increase in capacity, which we had expected in the second half of the year because of the higher oil prices.
Right, so that means that they would like reduce routes, right? Or they would
Correct.
They would start to try to fill up their planes more. Isn't that right?
It's more of when they increase capacity, it's more of adding routes.
Adding routes. Oh my gosh, totally the opposite. Okay.
Yes.
All right.
So if they're having less routes, yes, they lose money initially as they try to fill up to capacity on those planes, but if they're not adding any more flights, there's no opportunity to increase revenues.
Yep.
Okay.
All right.
We're also going to see which shippers they may have fewer products to ship.
Sure.
And with tariffs, that also would have to be either passed on to the consumer or eaten up by the company itself. So those are some unfortunate headwinds. And if Brent oil stays higher for a while and the dollar continues to increase, we will see that eat into operating profit margins.
All right. Well, Adam Lazarus, we'll leave it there for today. Thank you so much for your insight on kind of what's going on here earnings-wise as well as with the transportation sector. Excellent insight. Thank you so much.
No problem. Living the dream.
That's right. Living the dream indeed. Okay, ladies and gentlemen, this was Adam Lazarus. He's a transportation analyst here at Nasdaq IR Intelligence and IR Solutions. Thank you so much for tuning into this episode of IR Insight. We'll be back to you with another episode next week.